Hi friends, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's session, let us see the structure of Indian banking system. So this is the structure of Indian banking system. At the apex level, there is Reserve Bank of India. Under Reserve Bank of India, there are scheduled banks, non-scheduled banks and development banks. Under scheduled banks, there are two banks, that is commercial banks and cooperative banks. Under commercial banks, there are public sector banks, private sector banks, RRBs, that is regional rural banks, foreign banks, and from 2015, Reserve Bank of India, that is RBI, has set up two new banks, that is Small Finance Bank and Payment Bank. These are new banks which are set up in the year 2015. That is Small Finance Bank and Payment Bank. So all these banks comes under commercial bank. Cooperative banks, under cooperative banks there is Urban Cooperative Bank, State Cooperative Bank, Central Cooperative Bank and Primary Credit Society. Then there are development banks. Under development bank there is IDBI, SIDBI, Exim, NABARD and NHB. These are the development banks. So this is the structure of Indian banking system. We are going to see each structure in detail. First is Reserve Bank of India, that is Apex Bank. It is the central bank of our country. This is the logo of Reserve Bank of India. RBI was established on 1st April 1935 with the provision of Reserve Bank of India Act 1934. It was established on the recommendation of Hilton Young Commission. The head office of Reserve Bank of India was initially established in Kolkata. Then it was permanently moved to Mumbai in the year 1937. It was nationalized on 1st January 1949. 1st Jan 1949. Means after independence, the first bank which was nationalized by the government is Reserve Bank of India, and it is wholly owned by Government of India. The main function of Reserve Bank of India is the monetary authority. It regulates and supervises the financial system. It acts as a manager of foreign exchange management. It issues currency note. It also acts as a banker to the government and also act as a banker to banks. Banks means it acts as a banker to the commercial bank, cooperative banks and development banks. Next is scheduled banks and non-scheduled banks. Now there are two classification of banks based on the schedule of RBI Act 1934. Those are scheduled banks and non-scheduled banks. If any bank like commercial bank or private bank, if this bank wants to work under RBI, so or to work under the rules and regulations of RBI, so these banks are required to fulfill some conditions which is in the second schedule list of RBI Act 1934. So once the banks fulfill the condition, so those bank comes under scheduled banks. So scheduled banks are those banks which are listed in the second schedule of RBI Act 1934. In this table, I have given the difference between scheduled banks and non-scheduled banks. So scheduled banks are those banks which are listed in the second schedule of RBI Act 1934. Non-scheduled banks are those banks which are not listed in second schedule of RBI Act 1934. Now why they are not listed in the second schedule of RBI Act? Because there are some conditions which bank has to fulfill. So the conditions are minimum paid up capital of 5 lakh rupees. Means scheduled banks maintain minimum paid up capital of 5 lakh rupees. Non-scheduled banks, they do not have to maintain the minimum capital, but they have to maintain the minimum capital as per the respective act. Then scheduled banks must satisfy RBI that its affairs are conducted in the manner not detrimental to interest of its depositors. Non-scheduled banks do not have such condition. It must be a body corporate or cooperative society. Non-scheduled banks can be partnership or proprietor. Scheduled banks, they can borrow money from RBI for normal requirement. If any scheduled bank, if any commercial bank or private bank or public bank, if they need any money, they can borrow from Reserve Bank of India. Why? Because they are listed in the second schedule of RBI Act 1934. Non-scheduled banks, whereas non-scheduled banks, they can borrow money from RBI only in abnormal condition, means only in emergency condition non-scheduled banks can borrow. But whereas scheduled banks, they can borrow money for normal requirement. Scheduled banks are required to maintain cash reserve with RBI. Non-scheduled banks do not keep any cash reserve with RBI. So this is the difference between scheduled banks and non-scheduled banks. In short, scheduled banks are those banks which have fulfilled the requirement as per the RBI Act, and they are listed in the second schedule of RBI Act. And non-scheduled banks, those banks who have not fulfilled the requirement which is given in the schedules, and those banks are not listed in the second schedule of RBI Act 1934. After scheduled banks and non-scheduled banks, means scheduled banks are further classified into two banks, that is commercial banks and cooperative banks. First we'll see the commercial banks. Commercial banks are regulated by RBI under the Banking Regulation Act 1934. The main objective or the main purpose of this commercial bank is to make profit. The primary functions of commercial bank is to accept deposit, grant loans to the general public or corporates, etc. And these commercial banks are classified as public sector bank, private sector bank, regional rural banks, foreign banks, small finance bank, and payment banks. First is public sector bank. Now what are public sector banks? Public sector banks are owned and is operated by government. The majority shares of public sector banks are held by the Government of India. The majority shareholdings are of government. At present, with effect from 1st April 2020, there are 12 public sector banks, that is nationalized bank. Before 2020, there were 19 nationalized bank, but from 1st April 2020, there are 12 public sector banks. This is the list of public sector banks, 12 public sector banks with their establishment date and headquarters. First is Bank of Baroda, Bank of India, Bank of Maharashtra, Canara Bank, Central Bank of India, Indian Bank, Indian Overseas Bank, Punjab National Bank, Punjab and Sindh Bank, Union Bank of India, UCO Bank and State Bank of India. And these are the establishment date of each bank with its headquarter. All these are the public sector banks, or you can call it as a nationalized bank. These banks' shareholdings are with Government of India. Next is private sector banks. The private sector banks are those banks whose majority part of shares are not held by government. The majority stake or the shares, the majority shareholdings is with the private individuals. In India, at present, there are 22 private banks working. At present, there are 22 private banks working. The few like Axis Bank, Bandhan Bank, HDFC Bank, City Union Bank, Kotak Mahindra Bank, Yes Bank, ICICI Bank. So these are few private sector banks, but at present in India there are 22 private banks which are working. After private sector banks, there are regional rural banks, that is RRBs. Now RRB was formed on 2nd October 1975 under the Act of RRB Act 1976. The main objective behind the formation of RRB is to increase credit flow in rural areas and provide banking facility to rural and urban area. The shareholdings of these RRBs are 50% of central government, 35% of sponsor bank, 15% of state government. And these RRBs are managed by the sponsor bank, and it is regulated by RBI and NABARD. So the regional rural banks was established to increase the credit flow in rural areas and provide the banking facility. And the shareholdings of these regional rural banks are 50% of central government, 35% of sponsor bank and 15% with the state government. It is managed by the sponsor bank and it is regulated by it is regulated by Reserve Bank of India and NABARD. Example like Arunachal Pradesh Rural Bank. This is the bank established or sponsored by State Bank of India. Baroda Gujarat Grameen Bank, and it is sponsored by Bank of Baroda. At present there are 43 RRBs. At present there are 43 RRBs in India, and they are working under the sponsor banks and they are regulated by Reserve Bank of India and NABARD. Next is foreign banks. Now foreign banks are private banks and their headquarter is in different country, but the branches are in India. Okay, foreign banks are those banks which headquarters are in different countries and they have the branches in India. And these foreign banks in India are governed by the law of their headquarter, means in which state, in which country their headquarter is established, as well as they have to follow RBI rules under the Banking Regulation Act 1949. At present, there are 44 banks, 44 foreign banks working in India, few like HSBC and so on. Next is small finance bank. These banks are set up in the year 2015. There was a committee set up by the our Reserve Bank of India, that is Nichiket Mora, and this committee gave the recommendation to set up payment banks as well as the small finance bank. Now, why these banks were set up? Small finance banks are financial institutions and they intend to fund the financial needs to the underprivileged section through basic banking activity of lending and deposits. These small banks or these small businesses unit sets in rural areas, small or marginal farmers, unorganized entities, micro and small industries. So the small finance banks are established for the needs of underprivileged sections like rural areas, then the small farmers or unorganized sector, and this banks was made public in India on 16th April 2015. This small banks deals with the basic lending and deposit activity like loans, giving loan and accepting deposits. At present, there are 10 small finance bank working in India. These are the logos of small finance bank. These are the 10 small finance bank. Next is payment bank. These banks were also established or set up in 2015 by Reserve Bank of India. Now, payment bank is like any other bank, but these banks operate on small scale without involving any credit risk. In short, it carries out the most banking operation. It does not give any loans or it does not issue any credit cards to the customers. Payment bank accepts deposits up to only 1 lakh rupees. It offers remittance services, means transferring money from one account to another account. Then mobile payment, transfer, purchase and other banking services like ATM, debit cards, net banking and third party fund transfer. This payment banks are established on a small scale, but they do not involve in any credit risk. Any credit risk means it does not grant any loans to the customer. It does not issue any credit cards also. It only accepts demand deposits also up to 1 lakh rupees, and it provides the service like payment service or transfer services. There are 6 payment banks working in India. There is Airtel Payment Bank Limited, India Post Payment Bank Limited, Fino Payment Bank, Jio Payment Bank, Paytm Payment Bank and NSDL Payment Bank. These are the logos of each payment banks. Next is cooperative banks. Now, cooperative banks are registered under Cooperative Society Act 1912. And cooperative banks are regulated by RBI under 2 laws, namely Banking Regulation Act 1949 and Banking Law Cooperative Society Act 1955. Means any cooperative banks, they are registered under Cooperative Society Act, but these banks are regulated by RBI under 2 laws. First law is Banking Regulation Act 1949 and second law is Banking Law Cooperative Society Act 1955. NABARD is the apex body of the cooperative sectors in India. Cooperative bank includes urban cooperative banks, state cooperative banks, central cooperative banks and primary credit society. And last is development banks. Now, development banks are financial institutions that provides long-term credits to the particular sector. So, for the particular sector, development banks are NABARD, that is National Bank for Agriculture and Rural Development. It is established on 12th July 1982. Next is Exim Bank, Export Import Bank of India. It is set up in the year 1982. It promotes finance to the foreign trade. Next is National Housing Bank, NHB, set up in 1988 to promote the housing sector of our country. Next is Small Industrial Development Bank of India. In short, it is called as SIDBI. Set up on 2nd April 1990, and it promotes the finance to the micro, medium and small scale industries. So this is the structure of Indian banking system. I hope you have understood the structure of Indian banking system. Thank you very much. Please subscribe my YouTube channel, like and share the video.